Okay, now following on from the MC3 cycle, which we did earlier, I've removed the MC2 points because they're being away. Right, we've already confirmed that we can find out when the next cycles are due, because the MC4 cycle, which is one above this, which we're doing now, you cannot have more than 3 MC3 high points in a row. As you can see from this low here, there's 1, 2, 3, 4. Other than if one of those points is an inversion, and as you can see, none of these are inversions. So we can start back here. We'll put the template back on. So the MC4, red, point 1 is due around the red line, and it'll be around about here. So back here, if this is point 1, then back here will probably be point 8. So we'll mark those in now. Let's put that down there. And if we can actually remove the MC3 template and put the MC4 on, because it'll make it a lot easier. So get rid of the 3 and put the 4 on. This is already pre-done for you, as you can see. So there's point 8. Point 1 is due here, so we'll put point 1 in. Point 1. Point 2 is obviously here. Point 2. You can see where point 3 is due. You can see the market's pulled down. This 10 hasn't gone as high as the 8, and 11's not as low as the 9, in which case there's a turn here as well. So that has to be point 3. This obviously is point 4. Coming up to point 5, the bigger picture's up, so the chances are that'll be on time or late, so that'll be there. And next point here, so I'll mark all those in now. So that's obviously the 3. Obviously must be point 4 there. It's the 5. So obviously it has to be 7. Then there's point 8. Now the difference is, this is the MC4 cycle. It has 8 points over a 4-year period. So from this red line here is 4 physical years. Only 8 points. But the difference with this cycle is not only is it only 8 points, it does not invert. There is no inversions. So once you have point 8 low, it will go up to a point 1. If you look back here, point 8 is due prior to the red line. It's normally due on average around the middle. Then up to a point 1, which is due between the red line and the blue line. So over here, if the 8's coming here, as you can see, then it's got to go all the way up to after the red line, halfway across, in which case it's got to go up to at least here to be point 1. So back here, you know, in the middle of the year, you've got at least another 10 to 12 months of upward moving market. Looking at what we've got here, is this point here is due around this area. Chances are, considering it could have come early, because the next point is not due for quite a while. So we look back here, point 3, it's normally due roughly here. It can, as you can see by the area of the average range, it can come early. But point 4 is not due until quite a distance away, in which case that could be point 3, but because the bigger picture is down, because look, the 7's gone lower than the 5, the chance of this point should be early, in which case there's a very good chance it's come here with a 6, in which case it's a much bigger move down. So again, going by the rules, you cannot have more than 4 highs in a row unless one's an inversion point. But as you can see from here, there is an inversion point, so 1, 2, 3, 4. That could be here. That point would be unlikely to be that late, so point 2 should be here. So that's point 1. That is point 2, in which case this has come early. So I'll put those points in now. I'll point 1 up here. Okay, and point 2. And then finally point 3, which has come extra early. And then we're off down to point 4, which is due over here. But what it's telling us is also, you can look at this carefully again, so from back here there's 1, 2, 3, 4, 5, 6 points. So somewhere in here is a bigger cycle, which will be the MC5. Now as you can see, what happens This is definitively an MC5 point because the market has already gone lower than the previous MC4. But as you can see, when multiple cycles come in, because that will also be an MC2 and an MC1 point, the move from it is quite big. And again, similar situation to every other cycle, the biggest moves tend to occur, not always occur, but tend to occur either side of point 1. So that purple point 1, which is the MC4, the move from point 8 to point 1 is quite big. Similar again here, from point 8 to point 1, and price-wise is quite big. Tends to be all the time. So 8 to 1, 8 to 1. If you look at all the MC4 points and going through the past, it's nearly always 8 to 1 is the biggest move. But you can have between point 1 and 2, that tends to be either quick in time. So 8 to 1 tends to be sort of long drawn out, but still a big move in price. But commonly between points 1 and 2, you'll have a quick move. But it can be long at that side if between points 8 and 1 were quick. Going to move forwards a little bit. As you can see, the market's dropped. This is because an MC5 point's come in here. It's a much bigger cycle. So you've got the MC5, the MC4, the MC3, and there'll be a 2 and 1 there. So you've got 5 cycles coming in together. This point here will obviously, if you look back here, is point 9, and there'll be point 10. Point 11, that will obviously just before the white line, so again, probably here. Point 12 should be here, and then down to this one. So let's mark those in. And obviously it's coming down to point 6. Now that's a point 4, and there's the point 3. And we talked about earlier that possibly the point 3 is coming early. And you can see here quite clearly, I've obviously put this in wrong then, because that is a point 3, that can't be a point 5, it's too early. So this means that we have definitively had 4 highs in a row, because an inversion point, it's obvious. So now that must be point 1 there, this must be point 2, that has to be point 3. So if already marked in for you, you should be able to see that is impossible to be that early. So it has to be, this has to be point 1. It's just come late. So I'll now recorrect all those. Okay, now recorrected. So you can see clearly now that point 1, its average area is here. But because of this inversion has occurred, it's double inverted, it's caused extra points. This is why you have to look carefully. But once it's come back up here to point 6 on the MC3, this obviously had to come in the point 1 on the MC4 cycle. Market then went lower, this MC3 5, so subsequently it was confirmed as being in. Obviously the bigger cycle was in. So as soon as you saw this double inversion, there's a very good chance that it's going to make 4 highs in a row, and obviously it then comes down. Now this point 4 is coming late, and as you can see, this is the crash through 2008 with the financial crisis. Low points will tend to be on time or late if a bigger cycle is down, and subsequently here, point 2 is due on average before the blue line, like it is back here, but the bigger cycle was down, so it's come late. Then come up for the point 3, and then it's collapsed down to point 4. Now, there's a big move there between 3 and 4. But as I said, normally the biggest moves tend to occur either side of point 1, so 8 to 1, there's a reasonable move down to there. But it can happen at other positions. But what you should do if you want to look at a bigger scale is you should have looked at the MC5 cycle, because that was due here. And when the MC5 comes in, it's a much bigger move. So whatever time frame you want to trade, you must remember quite simply, you need to trade in the direction of the bigger cycle. So if you want to trade on the longer term, like for example with the MC4 or MC3, then you must consider, like here for example is the MC4 8, from this point onwards you know the next point is not due for a good few months, so you want to then trade the MC3 points in the direction of that MC4. You see it consistently here. Here's point 6 has come in, we're now going up to point 7. As you know, once 6 is in, 7 is not due for quite a few months yet, so you know the market is going to be up for the next few months. So now you use the MC3 and you trade up to this one to 14, and you trade again from 15 to 16, and trade again from 17 to 18. Same situation throughout. If you're going to be on a smaller time frame, so you're going to trade a few weeks at a time, then you want to be trading the MC1 in the direction of the MC2, or if you want to trade for a few months at a time, then the MC2 in the direction of the MC3. If you don't want to go through the process of applying a templates and manually doing this yourself, obviously we have a whole load of these cycle points already built in into this matrix add-on for ShareScope. You can find more information about this on our website at www.themarketmatrix.co.uk, where you'll also find there's a host of other videos in relation to the ShareScope software and the matrix add-on. As you can see here, the matrix add-on has solutions for the MC1, MC2, MC3 and MC4 on quite a few markets here. We even have Hang Seng, the Nikkei, but also some Forex, Aussie dollar, US dollar, even commodities like crude oil, Brent oil, silver and gold, the major forexes like the pound versus dollar, pound Japanese yen, even other indices like Nasdaq. There's gold and the composites and silver, and even US dollar, Swiss franc and US dollar Japanese yen. But these are all pre-built in, and they're built in for the next 20 years. So to round this up, as I say, all this information is on our website, so if you go there you'll find some other videos and some other information on this as well.